for a question, for for keeping touch all the time. So fair value gap, the thing important fair value gaps have is a kind of three candle formation, right? 1, 2, 3. And the thing is, the first one is not important. Okay, the first one is not the important one. We have three candle formation here, right? 1, 2, 3. It's not like the normal three candle formation we already know. It's not this one, three candle formation. Okay, this is another one. This is another three candle formation, another quarter formation. So let's talk about the quarter formation or the three candle formation of fair value gap. So it's totally different. So, okay, as I say, the first one is not so much important. Why? Because it's the base. So don't care about that. The second one, always it must to be an expansion. Why? Because that expansion is what creates that fair value gap. And the third, it could be two things. It could be an expansion or it could be a range. So we're gonna say a range when we have this one. When you can see this, the first candle don't close below or above the second candle close. So this is one, this is the expansion, and here we have a range. We call this a range. Okay, we call it that a range. Again, you can see here again, one, expansion, range. Why? As you can see, it's just the wick is not very close. So that's important. Why? Because when we have, I is trying to find another, well, it's very easy to see. One, well, one, expansion, and range. Why? Because the body can close about a little bit here, but it's a high wick, bit a stronger wick, so it's not valid. This is what I want to say. Okay, we have this one. 1, 2, and as you can see, this break about to the close of the previous candle. So that's is a valid, but you can expecting the market wants to still going up. So we get what we expecting in fair value gaps. We expecting in fair value gaps the markets want to go inside again to fill that fair value gap and continue. But when you have a powerful movement, you will have like many candles like that. So this one from here, like that. When we have kind of this, and you see this break below, in this case, you can expect in the market keep continuing down. So now we have this one and say, okay, we can enter here, but it keep going down, break it below this previous close. So that means the market have power. So the market want to keep moving down. And then we have three kinds of fair value gaps, but now we're gonna talking about just two. The first one is the normal one, and the other is the breakaway gap. So the normal one is when we have this movement and the market going back to fill the imbalance and then continue the previous movement. And the other one is the breakaway gap. That breakaway gap means it's away, so the market don't come to fill the imbalance and follow the trend. It's just stay there. That's a breakaway gap. So if we are here, like this one, what we have? Breakaway gap, bam, 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 breakaway gap, and breakaway gap. And here, this one is the last one. So this is not a breakaway. This is normal fair value gap and continue up. We're gonna use later this breakaway gap as overlapping gaps. Is the third way of gaps. to know where the market don't respect, for example, if the market don't respect here and still going down, we use as overlapping for have an idea where the market can reaction. But that's for the third session, so don't worry about that. So here again, we have that break here, and again, 1, 2. Okay, this is when we want to see the reaction, see? And this here, bam. Break away, break away. This is the normal one, and as you can see, come here, overlapping, and go up again. So that's the 3 ways we can find a fair value gap. So that's important. Why? Because what you want to see when you have a new range, like I always say, we're gonna use always the recently range. When you have that recently range, you want to see a fair value gap. That means that range is valid. I mean, I don't like that kind of things. Like, let me find someone, some example here. I mean, this one, everybody say, okay, break of structure. Well, yeah, but for me, it's not like so powerful. Why? Because as you see here, the market going up, but just immediately go inside again to the range. So that is not so powerful. That for me is a sweep of liquidity. So as you can see, come here, don't break anything else in the top. So go pam 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 into this low of here. And then what do you have again? Sweep. You don't have it, don't exist any displacement, any powerful movement. So the market don't want to going down, and at least not in this moment. And then what we start to see here is nothing, but we have here our first fair value gap, turtle soup, and boom, again, fair value gap. And now you can see how the market start moving up, 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 up. So that is some question about it. Is clear that? Okay. So the second one, liquidity. Well, liquidity, easy peasy. Well, we have first, we all know already, every swing high, swing low is liquidity. So that's not important things. I don't go in over that because we already know that. The second one, that's for me is important probably, is the market sessions. So I just have here Asia, but I could put also London and New York. So the market session, we already know after Asia take, probably we have a reaction and go to the low of Asia. In this case, is taken. It's the same. When we sweep this high from here, what we can see? We have that overlapping gap. So this gap is in that position. That means that's liquidity open. So if you see that movement as you come in the bearish movement, I mean in the downtrend, probably after sweep those highs is relative equal highs, then the market could come down. This is just sweep that. We don't have any other sweep. Let's keep going to see. In this case, is well the same sweep high of Asia, boom. Let's see here what we have. This is sweep previous. So that's why, as you see, that's what? That's London previous low. So it sweep London, it sweep previous daily low also, and that's the reaction. So in this case, I mean, for use that sweep of liquidity in Asia and that things, I prefer to use the structure. I don't use that so much because not always happen, and it could be wait. It could be a problem if you just watch this. I mean, I always say you never have to use by himself this kind of tools. You need to use all together, combining. So if we are here, we have bearish movement. Okay, this is my last recently range. Now from here, I have fair value gap. This is Asia. Okay, in this case, as you see, Asia sweep the movement and going down. Now what we have here, we have fair value gap. So what's my moment? What's the moment for entry? Is this one here. You can enter here actually. Then if you go up, let's say 4 hours. I mean here. 50, it's okay. So you can enter here actually. Because it's just the fair value gap there. I mean, I enter in the fair value gap usually, but you don't want to put here. That's why, I mean, it's no reason to do it. You can put here. I mean, you have this here. This is your OB because this is the last one. Not because it's the last one, but it's just the last change. As you can see here, that bullish candle, so the bearish one. So you have here, and then this reacting here. So 1, 2, 3. Tapped, tapped, and tapped. So all this is your order block or POI as you want to say. So you can say, okay. And you can target here is one, you can target even 1 to 2. Or you can use a tool that I will show you in lessons is this one, projection swings for Forex. We have different for Forex and for index. So we go over later. Well, that's the important thing for me in sweep of liquidity from the kill zone actually. After that, what we have swing high, swing low, blah blah blah, equal highs, equal lows. I mean, that's a very simple theory. I think everybody knows about it. So here, do you have any question here? IRL? I mean, for me, this is a very important question because you need to understand when is the real sweep and when is it just draw liquidity or sweep. Okay. Okay, that's what I'm gonna do. Yeah, actually, to mark correctly the ERL and IRL, you need to know what is MSS or liquidity. I'm gonna put it here. We have two kind of movement. We are here, okay? We have the sweep of liquidity, or we have the draw of liquidity. Okay, so which one is the difference between those? Well, as I said before, I like to see when the market going down or going up, displacement, or what? Fair value gap is the same. So when I see this, it take internal range and go for external range, I prefer to see that break, it will happen with what? With fair value gaps or continuous fair value gap, like breakaway gap. If I see kind of this, I mean like just a candle or just, I mean, even if the body close and then reacting back again, I don't trust so much. First of all, I need to see the movement break powerful in the powerful way. I mean like this. If we are here, for example, let's find some good example of that. Go to 4 hours, it's clear. I mean, we are already here. Can you see here? That's okay. That's the break. I prefer here. What that means for me? It take with body candle, yeah. But then we have this one going inside. So probably the market don't have so much power to going down. Even you cannot, like I say, you cannot do by yourself. I mean, that's not work just in self. As you can see here, we have this fair value gap, actually. So knowing this in the higher perspective, that's important. We say, okay, we are in 4 hours. And what we can see here, look, there's a difference between this and that. You see here, boom, powerful movement, then going down, but here is not so much. Then again, you have that fair value gap, but every time the market goes down, don't make a powerful displacement. I mean, we have fair value gap, yeah, but we don't have that fair value gap here. I mean, in this moment of break. So we have internal, external, take care, internal, external, very soft external movement. And then I will take from here. That's me. I mean, many people can take from here, but for me, this is just a sweep. This is a sweep of liquidity. So my break, my take of external is this one. And that is my marker structure shift. And then what you can see, fair value, breakaway, breakaway gap, boom. Okay. Powerful movement. It sweep two kind of liquidity. And then I have this, probably expecting some reaction going back. Then go up again, break again. Okay, what do you see? Boom, powerful movement above this break. Here again, extend, it take internal, fair value gap, and again, boom, 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 fair value gaps, powerful movement. 3 in a row, fair value gap, 3 in a row, again. In this case, as you see, just one, boom, then going down faster. In this case, it's not like this one. You can see go up, 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 and then 1, 2, 3, just one faster. That kind of movement usually are manipulation. If you see one powerful movement like that, usually is manipulation. Also, as we say before, we say this, okay, this is in a range and then going back. Here we don't have that range. Here we don't have this one. It could, you could say, okay, this one, it make that range. Okay, probably we could see some reaction here. But after that, what happened? Again, bam, 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 bam. Okay, so it means it's powerful movement. Here you can see any idea of retracement. Fair value gap here, okay. We have this one. But after that, it's in a range. We're probably expecting some reaction. Okay, don't do that. Then going up, 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 and then come inside. And now you have two kind of liquidity. or to kind of internal range liquidity, so it's better. What else here for sure? Here, this one is very ugly way. I mean, for me, I don't have any break of a structure until here. Because I need to see this one. So as I don't see, can you see here? Candle, 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 candle. Probably you say this one, okay, this is a body close. Okay, but can you see how is in the same moment reacting back? So I don't want to see that. So if I want to say, if I want to choose a range, I mean, I choose from here to here. And then I have my break here. Then I have 1, 2, go up a little bit, and then going down again. Why? Because I don't have this is all just sweep of liquidity. Sweep, 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 sweep. You don't have that powerful movement. You see here, that's a beautiful example. Powerful movement down, make kind of small reaction, and then keep going down. Actually, it could be the entry in this moment until here. But yeah, that's already done, so no reason. So here, powerful movement. But which one here? So you are here from here. Probably don't have any kind of retracement. You could enter here as I actually do. And break again, but you don't have any reaction here. So you could open until here and then you have that 50% and you have this reaction below this and in order with this breaker. So you have kind of many confluence there. And then you can see again, break faster, external. Okay, you can mark here. I actually marked here. This is my external because this is for me liquidity, and then that is the real break. So probably what I would like to do is something like take from here, even if, okay, take here. Even if not entry, because I don't expect that so much, I could enter here. Why? Because this is my first line of resistance. This is my float, I mean. When I want to get involved in a trade, I have like 2 or 3 areas when I want to be involved. This is my first line of resistance. I mean, the first fair value gap that I have. After that, you can have overlapping gap. You can have 50%. You could have any kind of OB. So that's the way. And that's why, because not all the time the market come to 50%. Even if you are trading here, for example, like this, you don't have any movement. I mean, just this one. Then after that, you can say, okay, we have a new range, but your range in this case is very rare. And that's why, I mean, this is not to do what I'm doing here. I just trade until here because I don't know actually all the market. For being very safe, the most safe moment is when you do this. You expect that market make a 50% of retracement because this is very, I mean, it could be not work. But after you have that 50% of retracement, probably is the best moment to entry. I mean, this is very basic. I think everybody knows here. But for ERL and IRL, that things. So what for me, ERL is the external range liquidity, as you see, and the internal range is everything inside of that. So that means what I have as internal range liquidity, I have swing highs. I have fair value gaps, in this case, swing highs, fair value gaps, I have any kind of OB, all of that is my PD array matrix. Let's use this example here. Okay, what is my first PD array matrix what I have here? Fair value gap. Okay, I fill that fair value gap, so it make invalid from this one at least. And what we have here right now, swing high. And that swing high is overlapping with what? POI. I mean, that swing high is just below what? That's POI. So you can mark your OB, your breaker block, and then that's the probable one you want to be involved. Also here, I usually go inside to see what's happened. What? Yeah.
Well, the solution wasn't to put me in an action movie. Let's go home. Yes. Get a store.
So, what else you have? Well, we have here this inverse fair value gap. And that means when you have two fair value gaps overlapping, that is also power movement. And in this case, that's what you have, because if you want to use your OB, actually, this is your normal OB, your bearish OB. 1, 2, 3 in a row, that's your OBs. But I mean, breaker here is work perfectly good. So in this case, as you see, I just use the float. I mean, the first line of defense. What is the fair value gap? When we are, okay, that's nice because I see this many times and I also like this. Okay, we have break of macrostructure. We have this. Okay, it's not work. Okay, everything good. And here. This again is just tricky because as you see, it's going down again. So probably you want to use like that. But let's say you use just this one. Okay, boom. So the market comes back again. And what we have? The first you have to note, if you didn't have like very powerful movement. So that means probably that sweep of liquidity want to come below to the other side to take that sweep of liquidity because you didn't have any fair value gap here. So the next we're going to see is this rejection block. We have the rejection block and we want to be involved in the 50% of that rejection block. And also we don't want to see the candle, it takes below the, in this case, below that 50% with body close. It could come with wick, that's okay. But we don't want to see that pass through this mean threshold with body close. So we see that. Also, we see kind of fair value gap, as you see. And you say, okay, I have, this is my, we can use this as, that actually this is the last OB we have because this is an OB in a road. So we sweep this liquidity, and as you can see, that those is very close. So, okay, after that, what that? That is just sweep of liquidity. It's just sweep of liquidity. You don't have to think the market going down, and you don't need it. Don't need it. Because what do we have? What is our last line of defense? Our last line of defense is the all lows in this case. All highs, all lows. I mean, when you are involved in this kind of PD arrays, and that's an important one I uploaded yesterday, you have mitigation, mitigation block, you have fair value gap, you have rejection block, you have order block, and you have this one that's important, swing highs or swing lows, and you have this all low, or in this case, or all high. So that's is also the last line of defense that you will like to be involved. Sometimes I enter here. I don't care what's happened here. I mean, that's not important for me. I check here, and if I go to 15 minutes, I would like to be involved in some of that movement. As you can see here, what the market says: sweep of liquidity, fair value gap. So you could be able to enter in this movement just right there. And then now you already know we can go to this top. But this is the important movement that you have to know is the last line of defense. And how you know that? Because, okay, when I can know I have that last line, well, you could see here any fair value gap, not this one, because this one is swept already. So you can see anything here. It's very weak movement. I mean, it's not powerful. Didn't break with powerful movement. So that's very soft movement. Then how you can see it's back here again. Bam, now we have 1, 2, kind of this overlapping breakaway gap. But you have the reaction, sweep of liquidity. And then we say, okay, we don't have anything here, but we are bullish. Also, you need to see the bigger picture in higher time frame to know what's happened, as we see before where we are right now. I mean, I think we are here. Nope. Well, we sweep this. Okay. OB. So that's why. And then we already know we sweep those movement from here. We are in a movement weekly. So we can go to 4 hours and understand this movement. We want to sweep all that liquidity. So that's why. Okay, we go in uptrend. So in this case here, now we have this sweep below. And then when you go to 15 minutes, you are able to entry, and then you can target this, because this is just a wick. This is not a body close. This is not a body candle. This is not powerful movement. This is not displacement. So that is the idea to how to know this. Also, the other way you can say, okay, I don't have here any powerful displacement, so I will still use all the movement because I don't have any powerful displacement. So now that's easy. You can see below 50%, you have that reaction. I mean, I prefer to do to the other way, but this way is also valid for sure. And what do you have here? Above 50%, you have this swing high. I mean, swing low, swing low. Probably, if I use this one, I would like to see it come below here, but as you see, don't do it. So I use the other way. I try to trade in the recent range. So what I have here, I don't have anything. Then I can be involved here. I can be involved here again. I can be involved here again. Even here, you see, it's actually very similar, almost in the top of the line. Because that is my recently range. Actually, I don't try to trade all this movement. It's too old for me. If I wait, like, I mean, if I use just this one, I mean, if I do this one, I could say, okay, all that movement, and then I have to wait. But here, if I do how I doing, I mean, like this one here, and then this one the other, I can be already involved here in this movement. I don't have anything here from like premium discount rate. As you see again, involved in this movement, again, and now of course, break it down. So any question about how to use, how to mark ERL or ARL? Again, the ARL, the external range, is every swing high, swing low, external. I mean, this is external, but this is also external. This is external, but this is also external. This is external. So what does market do? Break the external here. So we have external again. This is external. This is external. You can mark like that also if you want. And what is inside of this, let's say this here, 1A to B, this is all internal. It doesn't have to be swing low just. It could be swing low, it could be OB, it could be fair value gap, it could be any kind of OB like mitigation, breaker, it could be. So question about it? Super. Okay, we go. Kill zones. I don't gonna talk about this because everybody knows the kill zone is there. The time frame are there. So the only thing you need to change, I mean, the only things you need to change is the area because it's in this PDF is in EST time for making normal. So we have for Forex is 20 to 0, 2 to 5, 7 to 10, 10 to 12. For index is different. We have the first two are the same. I mean 20 to 0, 0, 2 to 5, and New York open in 8:30 to 11. So 8:30, I mean, I know the people I have friends who trade index, they wait a little bit more because they wait until the equity opens. I mean, that's in 9:30, I think. That's for them the best moment to trade. And this is the silver bullet. If you don't know the silver bullet, what it is, don't worry. We're going over that in next lessons. I mean, but it's important moment, important time in the market when you have some kind of liquidity and then you can trade, you can catch a good trade even if you don't have the bias. You don't need the bias for that. Is I mean, this is very no strategy, but here it is, the time for them. I mean, I know that's in Asia exists also silver bullet, but I don't know the time. I don't use it. So those here is the important one for silver bullet. What else? Okay. We're talking already about MSS and different between market shift structure and liquidity. Okay, when we have a market shift structure, we have a displacement. Well, let me say, okay, let me say one thing about it. What the difference between market structure shift and market break of structure? So, I mean, I think you already know this, so I'm just gonna tell because it's important for me to mark. So the market shift is the first change when you have. That's the first change that you have. Okay, when you have a market shift, don't mean the market want to really change. It's a market shift. It's like telling you that it's a possibility the market want to change. Again, you cannot use just this tool. You need to combine all the tools. So this is probably the first change the market give you. So the market break structure is what we know as BOS, BOS. It's the same here, here, here. So the shift is the first change, and the market break structure is when the keep continues, like here, continues with the movement and break the previous structure or break or take that external range liquidity. So this is market break of structure, and this is market structure shift. Okay, that's the difference. So you can say also, if it's easy for you, you can say boss, 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 choke. I mean, for me, that's the choke is not correct, because choke, it come from Elliot, not Elliot, Wyckoff system. And in Wyckoff system exists two kind of choke, change of character. So that's smart money concept taken from there, but take wrong. So it's not. Well, actually, the entry model, I will put it in the next video in the season 5. So don't worry. And we're going over that. For first, I want to be clear this, because sometimes the people think, okay, I see many of, well, not many, but some of you, for example, that's gold here. I mean, this kind of entry, let me, what I have here, actually, this kind of entry here. What is it? Okay, here. So you need to be patient. You need to be patient. And some of the students want to say, okay, here's the last point of defense. No, 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 that's not. This is actually this one. Also, what I'm seeing is the stop loss. I mean, it's fancy way to put the stop loss like that. It's very fancy. It's very, oh, that's beautiful. But actually, that's not true. I mean, if you get that, probably you'll be stopped many times before. Just give it space. Let the market breathe. Okay, I have here, not like that. This is of course 4 hours. I'm not gonna do that like that. But let the space. We are here, for example, yeah, in this movement. Okay, super. I go to 15 minutes. And if I want to be in bold here, I mean, if you see, I just tell you already how I used that my entry. I mean, not the entry, but my first and important entry model is this one. So okay, as you can see here, okay, this is very, very long movement. You don't want to be involved. Okay, let's make sooner here. This is for 15-minute entry. 15-minute entry is normal. Okay, what I'm doing, I go into 1 minute and blah blah blah, the same. But also you can say, okay, I don't want to be here. Why? Because this, as I can see, is very long, right? So let's move. What do you have here? Fair value gap. So again, you can say, okay, let's put in here. Let's give some space below this fair value gap, because it could come here. Yeah. So again, now you have that. Even if 15 minutes is targeting what? External range. You can take 4. This is the safety. 1 to 2, 1 to. So to have that kind of, I don't say that's not possible to take that 10 RR. That's, of course, it's possible. But I mean, I don't try to sell the people that things. I mean, for me, it's not real. And to get that, probably you are take so many stuff before, because you don't give space to the market to breathe. You don't give space to the market to move. So for me, 1 to 2, 1 to 3, 1 to 4 is okay. I mean, it's very, very easy to take that every day. You will be profitable. You don't need to do anything. I mean, you don't need to show the people you are a specialist to take that fancy movement. No, you just need to prove yourself. You are able to do that every day. I mean, even if it's 1 to 2, with that you can be profitable. You don't need to. I mean, I think before, like many of you, like I need to take 1 to 5, 1 to 10 to be profitable. That's not true. That's not true. You can take 1 to 1. I know people. I meet people who they trade 1 to 1, and they are profitable. I don't know how do they that, but they are profitable 1 to 1. I mean, for me, it's not logical, but they use it and they get money from them. So the important thing here is take money. It's not show the people in Instagram or that things. That's just for that's it. You know what I mean? So yeah, in the end, when I finish all this, I want to just go over. I want to go over all this. These 2 first session. I will make this I go over from basic things. I want to everything keep clear in these things, because I know many of you, I mean, even me, I knew some stuff of ICT system, but this is not so clear actually. I mean, for me, for example, the tool of PD array matrix, I don't have clear. Okay, yeah. Well, actually, is the important things here in ICT is to know two things. The bias is the important one, and the higher time frame for me. I mean, I usually use 4 hours, 15 and 1 minute. But I don't see so much this because actually I made some kind of scalp. So I want to be involved like very fast, but faster movement also in London time. I don't want to be so much in the computer. So, but here, for example, let's say this, let's use this from here. Let's take this one from here for example. What we have here, as you can see, this is weekly time frame. We have this range, we have this range, we have this range, just break. So which one is my recently range? This is the important point. Recently range is not this one. This is not a range. I mean, that's the thing why many people don't understand these things. I don't need this. I mean, I don't need this. I don't need this. Okay, I don't need it. This is liquidity already. So I don't want to be trading over this or trading over that. Which one is my recently legs or my recently range? Again, external from external, external from external, external, sweep the external. So my recently range is this one. And now I say, okay, this is my range. I'm going down. So what we have here? We have this breaker block. And why I choose the breaker block? Well, I choose the breaker block because I don't have any fair value gap. I have one here. As you can see, it break with powerful displacement. This is the displacement I want to see. Bam, bam, bam. Also two. I have one breakaway gap. I have one fair value gap. It tapped inside, come up, came inside, give me one fair value gap. And after C, I just wait because this is also displacement. So I wait. I mean, this is weekly, but of course it's the same for every time frame. You see, sweep liquidity, okay. Now I am reacting where? I am reacting in my last this one OB. This is my last OB. 2 in a row. It's not this one, guys. It's not this one. That's not correct. This is my OB. Okay, what I can do, I know that sweep of liquidity, so that is the last liquidity that I have, so I can come here. And now, as I know, I still can come here to sweep liquidity, but I don't expect in that. So I can say, okay, let's go 4 hours. I mean, if I want to see the daily bias for sure, where I am. This is what? Tuesday. So Monday, Tuesday, Wednesday. Okay, what's Wednesday? Change. The Wednesday, it could make the high or the low of the week. Also, Tuesday, it could do. I mean, this is in daily bias, in deeply daily bias. We will talk in the future. I put some basic steps to go over, and even you can learn like I put. I mean, sweep up, sweep up, sweep up, sweep up. Wednesday, what do? It's just logical. Sweep of liquidity. Okay, but what I am in OB. Wednesday, it could make what? It could make high of the week. Thursday, range. Okay. Let's see what's happened. So again, range, even sweep here, it makes range. So Monday, what I expecting? I expecting that continues going down. The only thing I don't like here is this fair value gap. So I could expect some reaction up until here or until here, because those are what? Those are PD array also, or those are liquidity, as you want to say. This is the thing I could expecting. So let's see. Even do that, super, even do that. So as I say, 1, 2, I expecting the movie going down. Monday, make a range. It could come up because this fair value gap, that's sweep fair value gap. So I don't have anything to do here until here. I break this fair value gap and I don't have anything else. Well, this is the other one. I can just react in here, or you can react in here like OB. Okay, I want to sell until where? Until here. This is daily bias. This is daily bias. Boom. And that we have Monday, Tuesday, high of the day. Wednesday, nothing. Thursday, okay, this is make some kind of range, and boom, it tapped that. So we can expect some kind of reaction. Yeah, we can expect some kind of reaction because we are that. The only powerful thing here is that one. So let's see. Monday, boom, into liquidity. It break the liquidity, so we can expect some kind of reaction possible until here. Okay, nothing, super. Sweep Monday, and then that we have what? Tuesday, high of we expect this is the high of the week. What we have? Displacement. So we break this, we break this. We are aligning with the higher time frame, and bam. So that's simple, guys. That's simple. Aligning with the higher time frame, and just what do you need to expect? Okay, I'm gonna tell you one thing. We have Monday. Usually it's a range. That's the normal one. I'm gonna explain you the normal one. Tuesday, it could make the high or the low of the week. Wednesday and Thursday, Wednesday, it could be explosion movement. Thursday, it could make the low of the week. And then Friday could be, again, kind of range. We will know that because we want to see the, wait. We will know that when we see the Tuesday or Wednesday sweep some kind of liquidity. In this case, what we have here, that's liquidity, that's Wednesday. What take liquidity? Monday, Tuesday, no. You take this one, and we have what? I mean, it take from here, right? Yeah, but look here, this week, this is a reaction candle. This is a reaction candle. This is not reaction candle. Actually, this is a very powerful movement. When you have this, and very, very low week, you don't expect the market reacting back. You expect keep continuous going up into this kind of week. Bam, going down, down, down. Here, what do you see? Monday, go up. Wednesday, here, for example. Monday, range. Tuesday, boom. You see this week? Where are we reacting for? Reacting from here. We are in discount rate. This is my discount rate. So if we have that movement, we can expect the next day it will sweep this one. Boom, actually, yeah. And then this is what? Wednesday. And then Thursday, it sweep what? Sweep the high. This one, this high from here, and then make this kind of formation. So you need to be, it's not like, you cannot read by himself. You need to read with all the movement. You need to read with sweep of liquidity, with discount and premium array. You need to use all of them. And that's the best way to understand what's happening in the market. Then you can come to 4 hours. Let's use this as example because it's, I think it's pretty clear. Now you can come to, I trade from weekly to 4 to 15, 15 to 1. Actually, this is show for C, but I just use, usually I go to those. So here, okay, we have this very powerful movement. Now we are here. So we cannot expect the market coming down because that's not probably what we have here. I mean, this one. So let's mark our range. This is our first market shift because it's the first break. Okay, we can mark also here from here. Okay, I will mark here as I actually do down there because this is a wick. External to internal. So this is my last range, right? So what I have here? This is, we see this one is daily fair value gap, so it's important one. Let's remove just for this. Okay, what I have here, fair value, super. What I have here, I could not take this week as breaker because it's not overlapping with nothing. So I will take the body. That's the difference. I will show that in my mentorship, private mentorship. So overlapping break a block, and then we have that. Okay, what else do I have? The last OB is there. So we are very close to that. So even in daily time frame, I know it have to come up. It could come here also to sweep that liquidity. Okay, so let's see. That's this from here. This week, this candle is Asia. So what do we have? You see, displacement up, displacement down. This displacement is a key. Boom. Until where? Until here. Okay. Okay. How can I get involved in this? Okay. For me, like I use, let's see if I can get that 50. Okay. Super. Easy. Where do I am? Asia. Again. 15. Sweep of liquidity. That's gap breakaway. This is a gap. So that's tapped in already. Volume imbalance. Gap. So probably I would like to enter here. I know this is very, I mean, the stop loss is high. But again, I don't care so much about that. I mean, I could take here and the last sweep. I mean, I don't want to see the market go up from here. Again, this is 15 minutes. Now I can mark again 4 hours. Coming down this sweep. And boom. I mean, no big deal. It's, if you know what the markets, the higher time frame want to do, you don't need to worry about. Even here, I mean, you could trade the also just the imbalance, volume imbalance. But I don't want, I mean, I don't want to play here, like for example, the breaker, because the breaker, why didn't come to the breaker? Because the breaker was taken already, as you see here. This week it taken already the breaker. So this is not no reason to trade there, right? Actually, the breaker is this one. Okay. It trade already inside of the breaker, so no reason to go inside. So this is my swing high, my protecting high. We have short-term trade, short-term high, intermediate-term high, short-term high. I don't want to see the market comes here, and I don't think so. Why? Because we have a very powerful displacement here. I mean, this is advanced content, and that is but you need to know, like, you have displacement, fair value gap, it sweep the fair value gap, it sweep the breaker, don't need to go again. So you have two ways to enter. You get entry here in the volume imbalance, aligning with what? Aligning with this here, this reclaim block, but this is Set this is like mitigation here. Then you say, okay, I can be aligned with the volume imbalance, mitigation block. This is a very powerful moment. Okay, or you can, like I do, directly come here and put my stop loss here and bam, easy. 1 to 4. I mean, this is all the day, but you could trade like that. Why? Because you know what the higher time frame is doing. You don't need to do anything else. You know, we come from bearish range. We are in OB, bearish OB. We sweep that liquidity. This Thursday make the high of the liquidity. We are in this, but it's not because I want to show you like pretty good. It's not because I trade here, here, here. All of this, I would never trade up in this case. This is liquidity, and you need to understand that I trade like that because I have this sweep of liquidity here. I mean, that's is my it could make my market structure in lower time frame. And why? Also because I don't respect this fair value gap. So if I don't respect this fair value gap, the most probably I would like to take this. But the first I have this that's this line of defense here. And then I will trade until there because that's liquidity. So I don't know what's going to happen after here. That's liquidity. Also this order block. Yeah, that's in daily. I mean, I go in the uptrend in daily. So I need to respect the daily things. I don't have any reaction here, so I can sell into where? The next PD array. That's the safe. I mean, that's the safety place. And I think everybody wants to get money in the safety way. I don't think you could trade until here, yeah, even more. But why? I mean, no reason. No reason. As you can see, 15-minute was powerful movement. Bam, 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 bam. That's the way. How's the way? That's the way. That's the way you know. I mean, you need to take that sweep of liquidity, that things, and then you will understand. Let's say, let's go over, for example, let's go over more example here. Even without any mark, we have here Monday, Tuesday, sweep of liquidity. What are we expecting? We have that kind of wick here, you see? So we can expect some kind of reaction. Let's see. Bam, reaction. We don't have any powerful movement there, so and then you see Monday, Tuesday, Wednesday. I mean, this is yeah. Tuesday. What's happening here? Thursday, Friday, sorry, Friday. Monday, Tuesday, sweep this. It's not powerful movement. I don't see any displacement. So it's likely to think it could go a little bit up just because this is powerful that this shit, okay? Nothing and nothing. That's, you see? Very lazy week. So again, even that, we have here the high of the week, but that's not so much. So, okay, we have Monday. You see the Monday is not expecting, so let's see. Tuesday, nothing. Well, sweep here, but it's not like a real sweep. Equal lows. Wednesday, okay, we have all this liquidity. Thursday, sweep the liquidity, and then we can expect some kind of reaction back in the Friday. Thanks God the Friday. Bam, again. So it's like I said, I use a lot this kind of have a, like one or two, but I use this one. Monday range, Tuesday or Wednesday, the high of the week. Wednesday or Thursday, the low of the week. And this is my Friday. I mean, Monday and Friday, I don't like to trade that. I mean, when I see something clear, then I use it. But if done, I don't trade it because it's not. I mean, no reason. Also, because when you go to calendar, you have the powerful movement Monday. I mean, Tuesday or Wednesday. So you need to be involved in the powerful movement. You can use the news to trade on it. I mean, no, not all of them, because some one of them is very complicated to trade. and I don't think is good to do. But the mostly you can trade it because the market needs to have fuel. So that fuel is what is the news. So again, what we have here, this is Monday sweep. So if I sweep this in Monday, okay, I could say, well, I don't have anything to do. So let's see, Tuesday, Wednesday, sweep down. We have liquidity from here. All of these are liquidity trend line. So let's wait. We can wait the market come here. Actually, what he do? What? I don't think you could. I mean, you could do it, but I think it's better if you go from 4 hours to 15 minutes or for 1 hour to 5 minutes. I mean, you could take here. Let's use this example. What we have right now. This is our OB actually, or our POI in 4 hours. Okay, let's go to 4 hours. Yeah, actually it's in OB in a row. It's an OB in a row. Also fair value gap. Let's use the breaker block here. Okay. Why I don't trade this one? Because actually this is not my range. I come from here, as you see. I could expect some kind of reaction. Yeah, but why? Because I come from here, and this is the recent range in this case. So you need to combine all the range that you're gonna use. But if you want to be here, I mean, like to trade down, I don't know your way of entry. I don't know. I will just say how I do it, and I will show you later. I have like 3 or 4 kinds of getting involved in the market. The entry models, I have 3 or 4. I'm gonna show you all of them. If I come to 1 minute, I can do this here. Let's see this. I can do this. Okay, this one. Let's use nearest. Let's go to 1 hour. Probably I have fun. Okay. Easy peasy. Okay, I have here. This is OB or POI, as you want to say. Let's start here from here. So as you can see here, if I go to 1 minute, you have many moment to entries. I don't know how do you, again, I don't know how do you get your entry model. I don't know, but as you can see here, I mean, you could get involved here for sure. You have 1 sweep of liquidity, then you get involved here. I mean, if you use, I don't know, dealing range to get entry. Okay, you have your dealing range, so you get entry here. Your stop loss, it will have to be somewhere around here. I mean, I don't say you need to put it, but let's say you want to put it here. You could enter for sure, and you could target this low from here. I mean, 1 to 2, 1 to. Let's use this tool 1 moment. 1 to 1. Okay, you could trade here. Even for me, this is one is okay. You could trade like that. Actually, yeah, you could do it. But that's not the huge movement. I mean, you could. It's better if you are near. If you come from 1 hour, for example, you could come to 5 minutes to say, okay, what I have this sweep. Pam, pam, pam. Okay, look here. This is very difficult to get involved. I probably get involved here in this one, in the second one, because this is just nothing. Even if I sweep here, I have a powerful reaction back. But okay, here I have my OB, my breaker, blah, blah. And then again, until here, I will try to buy to sell until here. So I will stop out. And again, you see, you don't want to do that. Even it's happen, okay? Even if it's happened, because it's normally have to happen things like that. But I mean, for me, what I learned, I prefer to take to 1 hour to 5, or to 4 hours to 15, and from 15 to 1 minute. That's what I do actually. I mean, I'm here. I read this. As you see, this is powerful movement, but going down and again. So here. Do I have any market shift? Yeah, actually I have those here. It's in Asia, but it's not, I mean, this is the real one. This is the real one. So after that, I have this, and I could have this one from here. Okay, that one. So what I see here, it sweep that liquidity. Okay, I could be involved there. Now I want to see what's happened here. Nothing clear. I mean, don't force yourself to get involved in the market. Don't force yourself. If you don't see anything clear, I mean, this is a very messy price action. Just keep clear. Keep clear. Don't try to be involved in something like this. Keep clear. I mean, like what I'm saying when I want to say keep clear, I mean like let me show you some clear. This is clear. This is in a clear one. This one here, this one from here. I mean, this one is clear one. This one here is clear one. Also this one, even if you take from here or from here. But this is just create liquidity. So you don't need to be involved of that. It's not clear price action. In this case, at least. So if you are not inside, okay, it's not inside. Okay, anyways, as you see, okay, you can think, okay, we have a break of a structure. Actually, no, because we have what? Sweep and sweep. So I delete it and say, okay, I mistake. This is my actually range. So again, I say, why is not break of a structure? Why is not market break of a structure? Because it's sweep by liquidity. If this was my first range, go inside, go up, and I have this as my low, what is that? Sweep of liquidity. The market going down again, and many people say, okay, break of structure. I'm gonna put my entry here. That is a mistake. Why? Well, first of all, because this is sweep. This is not a break. And even this, what we have here, we have weak, 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 weak. We don't have any break with body like this one, actually. We don't have that. So we don't need to think we're going down. What we going down in this, what happened in this powerful movement? Because many people see the same what we see. We see that 1 hour break, a 1 hour block, and then the people start to sell. Yeah, you have to sell. It's normal. This is your range. You need to sell for sure. That's probably, yeah. But it's not the right time. So after that, what do you have? Okay, here, sweep again. So I know after that sweep, and I want to see again that target. So again, you can say, okay, I make mistake. This is not my range. It's this one. Swing low, swing low, swing low. Reacting where? Reacting where? OB, the last OB. Boom. Okay, super. Let's target that. And then you can go to 1 minute after have this. And that is very, very clear movement to get involved in it. Let's see, the other important thing is I mean, for me, the market session actually personally is important, but not so much, because the market session is really, really, really important in index. But for London, like we have all the time we have money all the time, because anyways, it's not people get entry. So it's not so, I don't take care so much about it. I know that's rare to hear, but it's my way to think. I don't means you have to think like that, but it's my way to think. For me, Forex is always volatility. It's not the same index. You could use, like, for example, you have very powerful movement in that time frame, in the kill zones. So that is important for index, but for Forex, many times it's work without that. So what we have here, anyways, we have, this is Asia, New York, Asia, London, New York. Okay, let's put them out. So this is a close here, and then we can come here. This is the, yeah, open New York almost. So what do we have here? Now we can see that. Okay. Sweep, nothing. This sweep, not pretty clear. Well, here actually we have a displacement. This is nice one. We have a kind of displacement, but what I don't like is going down so faster. Boom, sweep liquidity. And then we have displacement. Displacement, that's the important one. You can get involved. You can get involved also here, actually, if you want. And then you have all that movement. Or you can get involved in some of these places. I mean, usually I will catch here using the dealing range. I will put in here. And my target, this one. I mean, that's another way to trade it using the dealing range. I will show you also. It's direct entry. It's not by, it's not in the, I mean, it's not, I just put it when I see. I forgot the name of this kind of entry. So it's like that. I mean, it's like that how you need to trade. Like, I mean, don't press yourself to go from 4 or 1 hour to 1 minute. It's not relevant. It's not necessary, actually. Also, you can get another trade here. From here. That it could be your entry, the first line of defense. The things here is the, it's a huge movement. 1 to 5. I don't think you will like to get entry here. It's not, I mean, you could, but it's not profitable for me, at least. So that's it. I mean, it's better if you go like slowly. If you want to go to 1 minute and just wait, but go like 5, go 15 from that way, because it's nearest. You cannot jump like that. I mean, you could do it, but you will be stopped sometimes. Any other questions about it? It's the same. It's the same, actually. Yeah. I mean, is ICT 2022 is the basics of what I give you right now. I mean, I put a little bit more things because I have I pay a mentorship, not from ICT, but from a student. And that's what I trade. You see me market and other things like overlapping, breakaway, blah, blah, or intermediate and high, intermediate and low, short-term high, short-term low, in deepest trade. But yeah, you could do it for sure. If it help you, yeah. I mean, it's the same. It's the same. The only thing is in ICT 2022 system is I mean, it's for free content, so he didn't give all the information. But you could be able to trade with that. Yeah, I start with that actually, and then I start to find another things, and I go over another mentor from his student. But yeah, you could make it for sure. Well, if okay, super. If no question, so I think we can finish this one today. Probably we get see it again Tuesday in the morning for my live one-to-one mentorship. Well, yeah, that's not ready yet because I made also for a Spanish community. So so I worked in two things in the same time, but it will be sure for the next month. I will start to tell us about that because also we need to I mean we need to meet I need to meet with Evo. We need to close some talking about some things about this change we have in the community. So we need to rearm all the things, we make all the things. So yeah, but I will let them know. Also, it will be in my sessions. We will put in the session, and yeah, that's it. Also, if you have any question with the buy and sell liquidity, buy side liquidity, sell side liquidity, you could tell me because I start with that, and I remember perfectly that system. Just in case if you have a question or Evo cannot respond in that time, you can tag me in the comments and I will be there. So this is the introduction. I know this is it could be very boring in the first place, but that's important. Everybody understand the introduction because that's the basic concepts and it's the structure for go over the trading system. So I invite you to go to the chart, just play around, try to see what I'm seeing today, and nothing. Have a good day. Have a good weekend and enjoy the time. See you the next. Bye-bye.